Welcome back to XRP Economic Radar, your premier destination for the most critical updates in the world of finance and cryptocurrency. Today, we are diving deep into a developing situation that has the entire market on edge, as Bitcoin faces a technical formation that could send shockwaves through the entire digital asset space. While many are looking for signs of a recovery, a prominent analyst is sounding the alarm on a textbook pattern that historically leads to significant downside pressure. This isn't just about Bitcoin. The implications of this move could dictate the trajectory for XRP and the broader altcoin market for months to come. We are going to break down why the mid-$60,000 range is becoming a battleground, and why one specific price target at $54,000 has become the focal point for professional traders. Make sure you stay with us until the very end, as we'll analyze the potential for a massive liquidity grab that could trap unsuspecting investors before the real move happens. The current atmosphere in the crypto market is one of growing tension, as Bitcoin trades under notable pressure and is currently hovering precariously in the mid-$60,000 range. Over the last 24 hours alone, we have seen a decline of over 1.5%, but the real story lies beneath the surface of these daily fluctuations. A combination of factors, including a hawkish Federal Reserve, rising bond yields, and a rapidly deteriorating chart structure, is compressing the current setup into a very tight and dangerous corner. When the Fed signals a tougher stance on spending and keeps interest rates tight, it ripples through every asset class, and crypto is no exception. This macro backdrop is creating a challenging environment for bulls, as the liquidity that usually fuels upward momentum is instead being absorbed by a market that feels increasingly fragile. For XRP holders, understanding this macroeconomic pressure is vital, as the days of individual assets moving in a vacuum are long gone. Bitcoin remains the primary driver of market sentiment. Adding weight to this bearish outlook is the pseudonymous analyst known as Dr. Profit, who has earned a reputation for precision by correctly calling Bitcoin's bull market peak at $126,000 and the subsequent sell-off. He is currently flagging a textbook bear flag that is formed on the daily time frame, a pattern that is often the precursor to a sharp leg down. To understand this structure, you have to look at the pole of the flag, which was created by Bitcoin's drop from the May high of $82,000 down to sub-$60,000. The recent bounce back towards $68,000 has merely formed the flag portion of this bearish continuation pattern. Dr. Profit is warning that everyone who is buying right now, believing the bottom is already in, might be making a massive mistake. From his perspective, these buyers are simply providing the exit liquidity that miners, venture capitalists, and struggling crypto businesses desperately need to survive the current downturn. The analysts' specific price targets are painting a sobering picture for the near future, starting with an initial flush toward the $54,000 to $56,000 region. He expects this to be followed by a period of sideways action before a potential deeper leg down takes Bitcoin into the $40,000 to $50,000 range. This isn't just one person's opinion. The options market is starting to reflect this exact same sentiment. Just last week, professional traders were actively buying put options with strike prices as low as $52,000, essentially betting on a significant drop. Dr. Profit argues that we are currently in stage 5 of the market cycle, which is the moment he has been awaiting for a final capitulation to occur. Historically, Bitcoin has never truly bottomed out without a clear minor capitulation, and we simply haven't seen that event yet in this cycle. Without a major casualty or a blow-off event similar to the collapses we saw last year, the market may not yet be strong enough to begin a sustained recovery. Beyond the technical charts, there are serious fundamental concerns emerging that could exacerbate this market weakness, particularly regarding the Ethereum Foundation. Reports suggest that Ethereum could face a core developer funding crisis within the next 3 to 9 months, as the foundation requires roughly $30 million per year to maintain operations. The same foundation that has been selling ETH to finance its projects is now signaling that they may no longer be able to sustain that funding. This is a massive red flag for the entire ecosystem, as a lack of funding for core developers means the future of the project itself could be at risk. If one of the largest pillars of the crypto world is facing a structural funding crisis, it reinforces the narrative that we are heading toward a larger capitulation. This atmosphere of uncertainty makes entering the market right now a risky proposition, as the system appears to be under extreme internal stress, while the technicals point toward lower levels. Despite the bearish technicals, the market is currently filled with what Dr. Profit calls noise, where people are talking about buying regardless of the price, while ignoring the deteriorating fundamentals and macroeconomic data. He notes that while positivity has returned to some social media circles, liquidity has been building massively below the current price over the last 60 days, acting like a magnet for a potential downward move. His trading plan has been remarkably consistent throughout this cycle, shorting at the $120,000 and $80,000 levels. Now, he is looking to place final short orders in the $68,000 to $69,000 region. While the momentum remains extremely bearish, he is prepared to add to his short positions if the market allows for one last visit to those higher levels, before the expected dump to the mid-$50,000 range. For the XRP Economic Radar community, this serves as a reminder to look past the daily hype and focus on where the smart money is positioning. The technical structure of Bitcoin is further complicated by the loss of the $72,000 zone, which previously acted as a key pillar of support. As long as Bitcoin continues to close daily candles below this region, the downside risk remains elevated, and the next major demand cluster isn't found until we hit $54,800. This specific price point is where structural support meets the critical 0.618 Fibonacci retracement level, making it a must-hold area for those hoping to avoid a deeper crash. However, the path down might not be a straight line. There is a very real possibility of a liquidity grab push toward the $77,000 to $78,000 range. This move would be designed to shake out short positions and create a false sense of bullishness before the final flush begins. Only a daily close above $78,300 would officially invalidate this bearish flag pattern and signal that the bulls have regained control. While the technicals look grim, some on-chain models are suggesting that $54,000 might actually be a floor worth defending, rather than just a stop on the way lower. Metrics like Willy Woo's CVDD floor, which sits near $45,500, and other on-chain clusters suggest the cycle bottom is likely between $46,000 and $54,000. This means that while more pain may be ahead, we are approaching levels that historically represent long-term value. However, the confirmation of the bear flag breakdown would likely trigger a measured move that cuts right through $54,000 toward the high $40,000 range. For many investors, the prospect of Bitcoin grinding toward a multi-month low is an uncomfortable environment to hold spot assets, leading some to look for rotation opportunities into early-stage infrastructure projects that can offer different return profiles while the majors consolidate at their cycle lows. One area where we are seeing significant movement despite the broader market gloom is in the development of Bitcoin Layer 2 solutions, such as Bitcoin Hyper. This project is attempting to address Bitcoin's structural constraints, slow transactions, and high fees, by integrating the Solana virtual machine to deliver fast, low-cost smart contracts on top of Bitcoin's security. The fact that its pre-sale has already raised nearly $33 million suggests that there is still a massive appetite for innovation and utility within the Bitcoin ecosystem, even when the price of the underlying asset is struggling. This kind of infrastructure play highlights that while the short-term price action of Bitcoin and XRP might be dictated by bearish flags and macroeconomic hawks, the long-term building phase of the industry is still very much alive. For investors, the challenge is navigating the immediate volatility while keeping an eye on the fundamental shifts that will define the next bull run. In summary, the formation of this massive bear flag on the Bitcoin chart is a development that no investor can afford to ignore. With professional analysts targeting a drop to the $54,000 range, and the macro environment remaining hostile, the risk of a significant market flush remains high. Whether this move results in a final capitulation that clears the way for a new all-time high, or marks a longer period of stagnation, depends on how these key support levels hold up in the coming weeks. We are watching the $68,000 level closely for any signs of a fakeout, but the data suggests caution is the name of the game right now. We will continue to monitor these market bombshells and provide you with the most accurate, data-driven analysis to help you navigate these turbulent waters. The situation is moving fast, and staying informed is your best defense against market volatility. Thank you for tuning in to this deep dive into the current state of the market. If you found this analysis helpful and want to stay ahead of the curve with the latest updates on XRP, Ripple, and the broader economic landscape, make sure to subscribe to XRP Economic Radar right now. We are committed to bringing you the most important news as it breaks. If you enjoyed this video, please hit the like button and share it with your fellow investors. It really helps the channel grow and allows us to keep providing this content. We also want to hear from you. Do you think we are heading for a $54,000 Bitcoin, or is this just another bear trap before a massive rally? Drop your thoughts and price predictions in the comments section below. I'll be jumping in to read your takes. Until next time, keep your eyes on the radar.